Against the U.S. farmer, what a resourceful group. You guys get it done year in and Davis, senior market strategist, here to talk to you about the grain markets this morning. There, corn and soybeans are lower, as they should be. We're moving rampant into harvest here, and corn is down a few cents here this morning. First chart today is the corn chart. Look at the gap. See if you can see this gap on December corn. It's at 429. There's a gap on the March corn too. So, you know, that's 45 cents away from here. Seems like a long ways away, but markets are real good at going and filling these gaps. Corn is a real good market at filling gaps. So maybe the function of this corn market is to trade to higher prices, fill this gap, let the U.S. farmer sell some of his corn or get some hedges on, and we'll talk more about that. Can't root against the U.S. farmer. What a resourceful group. You guys get it done year in and year out with more calamity that I've ever seen in my life. So kudos to you. Soybean market. China's economic slowdown is not going to crimp their purchases of U.S. soybeans. China's economic growth is more in the 3 to 5% range, not the 7% range. So we got a big managed short position in soy, big managed short position in wheat. This is bullish. This is a crowded trade. It's working today. Stay tuned for that. Okay, the September 30th crop report's out of the way. We rallied, the soybeans rallied into this report, kind of a buy the rumor, sell the facts scenario. September 30th, the high on November beans, 902 and a quarter. Yesterday's high, 899 and a quarter. There's your line in the sand, $9. If we can get above there and stay above there, these rallies last about 24 hours. So stay tuned for that. We got to get some rallies that can sustain themselves. Typically what happens, harvest ramps up, and soybeans and corn, they rally 10 or 20% on a normal year into the end of the year. We'll see how normal this year is. So October 9th report, that's a very big report. So we'll be talking more and more about that. And of course, prices can change dramatically. So we'll keep talking about some of these catalysts that can be the source of change. But as we make this transition from a supply-driven market to a demand-driven market, we got our work cut out for us. The strong dollar is crimping exports, not just agricultural exports. This is the first year U.S. exports are going to decline since the economic snafu in 2008 when Lehman Brothers bankruptcy and those kinds of things. So we've got our work cut out for us to market the grain. Farmers are going to store soybeans and corn perhaps here in the short term. That can be bullish in the short term, and we'll see what happens. Everybody have a great weekend. For all investors.